Okay, quick Wednesday morning radar update. Little gap up in the FTSE. DAX just drifted down into the pivot pretty early, into the zombie session. Kind of 50% pullback from yesterday's lows. 250 holding up a bit stronger, and small caps strongest. Very quiet day. Yesterday was a nice day in small caps. It's we had a really active sort of portfolio. Today it's kind of nothing moving. But let's jump straight into the volume leaders. Just a quick heads up of what I do with what am I trying to achieve by going through these every day. I'm looking for stocks what are rising on volume. It's as simple as that. I'm not interested in anything what's trading down. I've got a minimum sort of a trend filter, what's a minimum for my time frame. I want to ride stocks what are structurally sound and are ready to emerge. I am not, in fact, Fevertree is a good example. I am not interested in any stocks what have been running for months and months, because these, say we're here and this hits the screens, I should already have my position on. So what do I mean by that? Well, the market is unraveling in front of us, and new ideas will be emerging daily, weekly, whatever, quality ideas, they're like buses, but I just have to turn up every day and see what is emerging. If they're not emerging, they're not rising, you can't make money. So, if it's emerging on my time frame, that is the start. There's a lot of bad information out there. I'll just do a little side off piece shoot, and people will basically buy stuff. What's doing I'll just invert the scale. Because something's fallen. In fact, I don't need to invert the scale. I'll just go back to bring the look. Because something's fallen, they will start to sort of, and it's usually on ex-leaders as well. There's an obsession with things what have done well in the past. So when they fall, they start to, hit sort of a value ratio for someone, and they'll go, oh yeah, you can buy it at half the price, especially on something like Fevertree. It was £38, now you can buy it for, £20, whatever. And then bang, down it goes again and loses another 50 odd %. So from the breaking trend. What you've got to remember is, this is the area where a lot of people get sucked into when they're new at shares. And the best stocks, what are emerging, nobody is talking about them. They never are. They might be, but they're not going to have the frothy sort of worshipping that something like Fevertree had when it was running out of steam up here. So where do we find those? Well, we're going to find them on a rising time period. I'll tell you now, you're not making money on anything what can't trade. If your time frame is, mine's trend, as long as the trend lasts. If your time frame is anything over months, you are not making any money on anything what can't trade. A high over so many months. Say your time frame is 9 months and it's not trading a 9-month high, you are not making any money. So if I want to stay in a trend forever, reality is it never happens. But I'm going to ride those trends. They're not going to be found. If I want to trade a trend for 12 months, it's not going to be found on 12-month lows, 52-week lows. So if I want to ride a trend for 52 weeks average, none of those trends will be trading 52-week lows. That is crystal ball stuff. So what do? Well, I look for emerging trends early on. Simple Dow theory, prices have to trade highs, and 52-week highs on Fever Tree. This was 52-week. I could even go later. 52-week high areas, and it still made a huge move after that. So buying highs does not mean you've missed the boat. Buying highs mean you've got something what's going in the right direction, and then you've got to do your research and say, well, has it got the gas in the tank? I want to weight my portfolio in the stocks what have the best gas in the tank. In reality, it's first come first served basis. But on the journey, sometimes the tank will run empty and it will decelerate for a year, and the technicals will kind of, the fundamentals will have to back and fill into the technicals, and the stock will go sideways, and sometimes it will just overrun itself and then it will just come back in. But I don't predict these things, I just expect them. I'm there to get on board, get my portfolio running on things. The weighting of the P&L should be weighted in things what are doing good stuff, they're in profit, they're going higher. If you start selling out of stuff like that and buying more of what's not working, obviously the way you're not going to make any money. You're going to be chopping around with huge sort of risk on your portfolio, because a gap down in something you've weighted more, it's already at a loss and you weight more money in it. The old averaging down, everyone teaches it because nobody wants to be wrong. At the end of the day, it's how much you've got weighted in what's working, what pays you. So I'm not interested in anything what's already run its course. This could be going sideways forever. It could be going sideways to down. We might not see it again. Whatever. I've not seen many stocks what have made a run like that and then have made another run in fast succession. I've been sat here over a decade, every day looking at charts. I've been investing since I was a kid. You don't see these things very often. Ones what make a big trending run, break trend, and then make another big trending run. They are out there, but they are hen's teeth. We call them outliers. If we do business where trends start, naturally we will catch a few outliers on the journey. But there is no way of screening for the outliers beforehand. So, I said a little bit of off-piste. That was kind of a lot of off-piste. That's what I'm doing. I'm just looking for stocks what emerge. I'm not interested in anything what's been running for some time, because I've already had a low risk entry go through my screens, and I've either taken it and I've got a position, or I've not taken it. So with that in mind, let's just fly through these large caps. It is 10:47. We should have traded, I'd say 42% to be on average volume. We're going to lose a few stocks off this list. There's not many in there. Is that right? 40. Sorry, we should have traded 33% to be on average volume. Quite a few stocks in there actually. They've just bounced a little bit in the last half hour. So let's just buzz through these. CLG, case in point, we saw it here, we saw it here, we saw it here, we saw it here. We see every pullback entry as well, and this is making money for someone who took that trade. Future, I micromanaged this one. I moved the money into something else. I'll tell you where I micromanaged it. Somewhere over here. So somewhere in this sort of run here somewhere. Micromanagement on an epic scale by me. 250 stock I tend to try and add to sort of small caps. So I've micromanaged Kainos as well, so we'll see how that one keeps going. And then we'll move into the small caps. PGS still moving. LUCE. So, you know, I've done a video on this on the YouTube the day I entered it. I think it was probably this day here or something. So there'll be a video on YouTube covering this. And same, you know, it moved up, it came in, it moved up. We're up over 50% on it, maybe 55, 60%. Not sure without double checking. But it's working. Added to it on the journey. 33% in the small caps. What's running today in the small caps? Another case in point there. You know. Couth, we saw that one, was it? It's over a week ago now, I think. A little bit thin for me now. I did have a look at it, but on the pullback as it started to emerge again. But this was the stage one, IPO base. If you're still riding that, still looks fine. C-box, obviously we've had a look at that as a pullback with the view it could mutate into a base, and it still looks okay actually. Could draw a little line in the sand here as well, you know. Obviously with lower risk entries were down here. I say lower risk, not always lower risk, you know. Sometimes the earlier entries can be sort of a stage one from an area with supply might be more risky at a lower price than letting that sort of, you know, get a little bit more trend behind it. And Deliveroo. So, you know, wouldn't pass the growth screen, but you know, it's a pretty good high five to Nandish on that, I think, because he's the one who saw that little ledge there in the little base under the trend. Really, there was another little base here as well on this one, emerging from that. I say anywhere in the right hand side is pretty normal area. Stair stepping action. Do not follow tips. Learn a process. All the rest of the things we work on. So that is today's volume leaders. It seems like quite a quiet day out there, but we'll see how we go as we. Everyone's predicting doom and gloom as always. They have been doing since last August. So, you know, I'll take doom and gloom if that's how the market, you know, the stocks we were seeing. I'll take doom and gloom all day long and trade the doom and gloom market, because it's been a bit grindy of late, but certainly hasn't been doom and gloom. It's been a great market for growth stocks. Okay,